There's like two things going against you right off the bat. That's why I think doing a lump sum buy is probably better. And yeah, maybe it'll go down 10%, 20%, but you know, you just have to look at it from a bird's eye view. Like, where is this going? And I think that's what a lot of people miss. A lot of analysts miss that. A lot of critics miss it. And it is really the replacement of all money. And if you can't stomach 10, 20% drawdowns holding an asset that's going to replace everything, then you probably don't deserve it.
When do you think Bitcoin is going to see its first God candle?
In the next couple of weeks.
Oh, you think before the end of the year?
Yeah, we've almost had a God candle. I think we hit 99.4K, something like that.
Yeah. I think I mentioned that. I posted it and I tweeted you. I tagged you on that tweet. Yeah, okay. And what about the Omega?
Let's see. Could be post-inauguration, but it's definitely coming closer because you can see more and more countries are talking about accumulating Bitcoin for their treasury. Yeah. So if the buying aligns in a certain day, then you'll see an Omega candle.
Samson Mow begins by addressing the concept of Bitcoin's God candle, a significant and rapid price surge. He believes we are nearing such a pivotal moment, driven by a confluence of macroeconomic factors and escalating interest from nation-states. Reflecting on Bitcoin's historical movements, he notes that the cryptocurrency has already displayed near God candle behavior with significant price jumps. He predicts that with increasing institutional and governmental accumulation, a genuine God candle could materialize, potentially before the year ends or shortly after key global events such as political inaugurations.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
Yeah, I would say the biggest thing that people need to consider is, what if the current system that you grew up with, you're familiar with, is just gone one day? And I think that's where we're headed. If you look at the macroeconomic environment, all signs point to some sort of systemic failure of the current system somehow. Either it just falls flat, or there's just a debt jubilee and everyone just wipes the slate clean and we rebase to Bitcoin. But none of this is sustainable, and the US debt is probably the best indicator of that, right? We're at $36.2 trillion now in debt, and that's growing very rapidly. I think 200 billion was just added in the last couple months. So that compound interest is brutal. I mean, compound interest is great if it's on your savings, but on debt, it just quickly goes exponential. I think you'll still see some volatility, but the volatility is going to be muted because there's just so much buy pressure, and now you have MicroStrategy in the S&P 100, and that makes them automatically allocated to a lot of passive funds that just will invest regardless of the price. So you have a new buyer of last resort. You already had buyers of last resort, which is us, the hodlers, but now you have another one, and a big one too. So we'll still see volatility, but you'll definitely see a lot less of those massive dips that we've had in the past. I think if you can lump sum buy, just do that. DCA if you have a lump sum buy already, but if you're trying to get in for the first time, just do a lump sum buy and then DCA with what you can. But if you can lump sum buy, it'll be better. Yeah, everyone thinks that they're really clever and, I'll buy when it's cheap. But psychologically, if you're new to Bitcoin, you won't. And realistically, you're not going to be smart enough to catch the dip or be around to buy the dip too. So there's like two things going against you right off the bat. That's why I think doing a lump sum buy is probably better. And yeah, maybe it'll go down 10%, 20%, but you just have to look at it from a bird's eye view. Like, where is this going? And I think that's what a lot of people miss. A lot of analysts miss that. A lot of critics miss it. And it is really the replacement of all money. And if you can't stomach 10, 20% drawdowns holding an asset that's going to replace everything, then you probably don't deserve it. Because once they start signaling that they're buying,
Yeah.
I think it's going to be very hard to reach that target, right? Just hitting that target is difficult. I think Saylor was able to get to his target 1% and beyond because he started in a bear market, right? He started when the price was low. Now the price is at 0.1. Bitcoin can easily 10x, and we've done 10, 17x before too. And with the nation states buying with unlimited bullets, they can really quickly bid this up very quickly. So the question is how fast they can move is one dimension of it. If they can go quickly, maybe there's a chance. But I think as soon as they start to buy in numbers, like serious buys, like buying 100,000 coins, reaching that 100,000 target, I think we're going to start to see Bitcoin shoot up very rapidly to maybe 5 million a coin. If a nation state is buying in size, you kind of have to understand that you probably shouldn't sell it. So when Bitcoin starts to go really exponential, like it's going from 1 to 2 million to 3 million, then I think people are going to question, what exactly am I selling the Bitcoin for? Why am I selling it for the dollars that the government is spending to buy Bitcoin? And what am I going to do with the dollars? What is the interest rate on those dollars? Like, how am I monetizing my dollars then? And at the same time, geopolitically, countries are moving away from the dollar. So maybe it's declining in usage in international trade. So there's a lot of dimensionality to this that I think people have to think about and consider. But they're definitely going to see it firsthand, and they'll have to deal with it on the spot when it hits. But I just think there is a point at which you can no longer be oblivious to what's happening, and you have to understand, like, okay, I'm going to sell Bitcoin to the government for $5 million, and what do I do with that now? Like, merchants are starting to price things in sats. So did I make a bad trade or a good trade? I think they'll find out it's a bad trade.
Mow critiques the country's crackdown on exchanges and mining, arguing that these actions cost China the chance to become a dominant Bitcoin superpower. In contrast, the United States remains well positioned to leverage Bitcoin's rise, ensuring its financial dominance for centuries to come. Mow's discussion extends to practical implications for the average person. He highlights the finite nature of Bitcoin, with only 2.1 quadrillion satoshis available for a global population of 8 billion. This scarcity will make Bitcoin ownership increasingly exclusive, with most people priced out of meaningful accumulation. Historical comparisons to fiat currency purchasing power reveal a plausible scenario where daily transactions, such as buying a burger, are conducted in fractions of satoshis.
If you look at my Max Payne theory, it's that most people in the world are going to get priced out of buying Bitcoin at a cheap price very quickly, because that's the maximum detrimental thing to the most amount of people, right? And that's probably what's going to happen, that the power dynamic and economic dynamic in the world doesn't really change. The poor countries don't really get ahead. Maybe Bhutan and El Salvador now, because they have a lot. But, generally speaking, most countries don't have a policy in place or even a plan to put a policy in place. So they'll be left behind. And the US is going to be still the dominant financial center in the world. I think China really missed the mark. They just missed it. They cracked down on exchanges. They cracked down on mining when they could have been the Bitcoin superpower. And yeah, the US is going to end up as still dominant for another couple hundred years until MicroStrategy becomes a country. And then we'll see.
Yeah.
But I think we're going to see it go up. And people are just going to wish that we had big drawdowns so they could buy cheaper. Because if you think about it, your average Bitcoiner that's making normal wages is going to buy a lot less Bitcoin as the price goes up. So they're going to hope that we do have a dip or we do have a crash, and it just won't come, and their ability to stack will just drop gradually, or not so gradually.
Yeah.
generally these things happen very quickly. The expectation, I think, of a lot of people, including Bitcoiners and some Bitcoin bulls, is that it's going to happen over like a 20, 30 year period. But if you look at the collapse of currencies, they happen very rapidly, and it's typically very chaotic. So we'll see how it goes. But this is sort of why I think it's important that we do outreach and we try to get parallel systems into place where countries can have both currencies at the same time, Bitcoin and their native currency, and transition as gradually as possible. But I would say Max Payne theory dictates that it's going to happen very quickly and chaotically. Because I think the key message here is that there is not a lot of available Bitcoin. So if you look at the diagram, the top of the bottom pyramid is what is left for mining and available for sale. It's a very small amount, but the available capital in the world is massive. And all of that has to cram into this little top cap piece of a pyramid. And when I look at available capital, that's like real estate. It could be derivatives backing other things. It could be gold. It's like everything else. Somewhere numbers in the range of, I don't know, $1 quadrillion, maybe 1.5. It's all rough estimates that we have when you're trying to estimate the value of everything in the world. But it is pretty big compared to the couple million coins that might be available for purchase. People don't want bad money. Like they'll realize quickly, like, okay, my neighbor is not accepting it, or the corner store is not accepting the fiat anymore, and they'll quickly realize that they should start buying in Bitcoin. And at a certain point at which that happens, people just start pricing it in Satoshis. Like we already have the Lightning Network transactions mostly priced in Satoshis, right? People are using sats as the unit of account for Lightning, and it's been like that for years. So that's just going to accelerate, and I think it makes sense. Like if you divide 2.1 quadrillion sats amongst the 8 billion people in the world, you end up with a number like 259,259 sats per person.
Yeah.
And we know that's not possible to achieve because the ETFs hold a massive amount, MicroStrategy holds a massive amount, and there's hodlers. So what is the real number? Probably closer to like somewhere in the 10,000 to 50,000 sat range. And if you look at purchasing power of the dollar going back 100 years, that's kind of roughly right. You paid, I think maybe in the 60s and 70s, you'd pay 15 cents for a burger. So maybe you'll pay 15 sats for a burger, but I think maybe lower. It might be like 2 sats or something like that. But that kind of number scale seems to make sense if you go back to that 1960s earning and wages. You make 1,000 sats a month, and in a year you make 12,000. House maybe costs 2 years of your wage, so it's 24,000 sats. But these kind of scales probably make sense, and we'll probably need to go to sub-sat denominations like sat cents. Like 100 of these sat cents makes 1 sat.
Mow advocates for the development of parallel systems where Bitcoin and existing fiat currencies coexist, allowing for a smoother transition. However, he warns that such an ideal scenario may be overridden by the chaotic and rapid collapse of traditional currencies, consistent with historical precedents. Ultimately, Mow paints a picture of Bitcoin as an unstoppable force reshaping the economic and geopolitical landscape. As he explains, the convergence of limited supply, institutional adoption, and growing public awareness creates a perfect storm for Bitcoin's ascent. He encourages individuals and nations alike to act decisively as the window of opportunity to accumulate Bitcoin at affordable prices is rapidly closing.
Please like and subscribe my channel.